Yeah. Okay. So second inventory is very important. So that is preparation of financial statements. You can see there in the small image I put there. You can see there financial statements mean balance sheet, income statements, or it's also called as profit and loss account, cash flows, and equity statement. Okay. So these financial statements are very, very vital for every company. Every company they need to prepare, whether it's a sole trading or whether it is a joint stock company, whether it's a partnership firm or whether it is a family run business. Anybody they have to prepare these statements. They have to submit to the. It has to be audited and it has to be submitted to the income tax department. They have to submit to the government authorities, Ministry of Corporate Affairs. Okay, so these are very, very important. So these statements, these are called as formal records because they are prepared very formally in a prescribed format which is given by the Companies Act 2013, which has been amended. Okay, so Companies Acts will give the clear formats what they need to follow for preparing the financial statements. So what are these statements? These statements consist of all the activities the company does throughout the financial year. One financial year or the calendar year, what all the activities they have done, the financial activity of an enterprise will be listed here. So these are written formats that includes your quantitative, quantify the financial strength, how much strong is your company, how will you come to know? If you want to know your financial strength of your company, what will you see? I think all of you have gone through the LMS lessons. Uh, how many of you have not gone through the LMS lesson? Can you raise your hands? How many of you have not gone through the LMS lessons? Who have not read the lesson and who have not given the challenge question? Can you raise your hands? No hand is rising. That means everybody has read. Or let me change the question. How many of you read and answered the challenge question? That anyways I can find out from LMS statistics. Let me check your honesty. Please raise your hands. Those who read. Those who read the LMS content, please raise your hands. And challenge questions you have gone through and watched all the videos, short videos. But majority of you are not done. It's a very sorry and sad state. Yeah. Okay. Please follow the instructions, whatever we are giving, or else, see, only 44 students have read out of 109 participants today's class. Can you know the reason? What is the reason, students? Can someone tell me why you're not able to read? Yeah, anyone? Those are not read, please tell me what was the problem in reading and answering challenge question. So I also can understand what is the problem you are facing. Can someone please respond? Or else you want me to tell the names? Jetlin, Jetlin, please tell why you're not able to read. Jetlin,
Yes, sir.
yeah, why you not read the lesson in the LMS?
Sir, I didn't see the message, sir.
Don't tell me that reason. You have to see.
Yes, sir.
Thomas 2101.
Sir,
Yeah, why you not read?
sir, actually, the electricity board is changing the grid here, so electricity won't be here. So that was the reason, and also I was not at home yesterday.
I didn't get you. Commerce student?
Sorry?
What did you say? You are not a commerce student.
No. I mean, in our area, the electricity board is changing the grid, so we don't have current often here in 2-3 days. So
Okay, what about today? Today you have, write it. Okay, these are called as supplementary notes. Clear? So balance sheet, income statement, cash flow statement, changes in equity and supplementary notes. All these are called as financial statements. Clear? Any doubt, students, till now? Anybody, any doubt? So what is a financial statement? If you say in one word, it actually shows you where the company's money came from, where it went and where it is now. So you can see that from where it came, you can see in balance sheet, in the capital, then you can see where it went, you can see in the cash flow and income statement, where it is now, again you can see in balance sheet. Understood? So this is a simple statement. Financial statement gives you the money what is invested by the owner. Where is that money today? What it is being done with that money and how much is remaining now? All that you can find in your financial statements. Is it clear? Students, you can no, you can 1 minute. You can lower your hands. All of you, please lower your hands. Yeah. Any doubt till now? Students, can someone respond? Any doubt?
No, sir.
Are you able to understand? Are you following it?
Yes, sir.
Whatever I'm
Yes,
telling.
sir.
Yes, sir.
Yes, sir.
Kindly interrupt if you're not following. See, those who are read the LMS, it is easy for you to understand. Those who are not read, it's very difficult. That's why I'm telling you to please read. So first thing we will take up, what we come across is trading account. Trading and profit and loss account, normally we prepare together and then we prepare balance sheet. Okay. So for our syllabus, we will be actually preparing for two entities. One is called sole trading concern. That is, what do you mean by sole trading concern? Commerce students, can you tell me?
Single on.
Only single owner, sir.
No, I can't hear. Can you
The
repeat?
single
Single
owner.
owner.
Single owner. There is only one owner who's running the entire business. We will prepare financial statements for the single owner, and then we will take up the joint stock companies. Okay, we will try to finish sole proprietorship before your midterm exam, and joint stock training, joint stock companies will take after your midterm exam. Is it okay? Okay. So what is
Yes,
trading
sir.
account?
Sir.
Trading account. Yeah. Somebody is talking. Can you repeat? Hello? Any doubt? Okay, let us first understand what is trading account. As the word says, trading account, here we will record all the trading on, and it's also called as trading and manufacturing account. If it is a manufacturing firm, they write it as trading and manufacturing account. This is actually prepared by those businesses who are involved in trading and or manufacturing. The companies who are involved in service sector like insurance companies, like banking companies, they won't prepare trading account. Clear? So trading accounts is prepared using the purchases and the total purchases and the total sales, reducing your sales return and purchase return, and will be debiting all the direct expenses. All the direct expenses what is incurred by the company to produce your product. Okay, apart from your office expenses, marketing expenses, and all financial expenses and other things. Clear? Direct expenses which will become part of your product, like raw material. The raw material is called direct expenses because it becomes part of the product. For example, if I buy a bottle, water bottle, what is the raw material for this?
Plastic.
Plastic. Okay, purchase of raw material is direct expense or indirect expense?
Direct expense.
Direct,
Direct
because
expense.
it becomes part of the product. Yes or no? Plastic is there in the product. I can see the plastic. So anything which you can see in the product, okay, directly or indirectly, which is there part of the product, it becomes the direct expense. So those direct expenses we will be writing, and then we will calculate gross profit or gross loss. Okay. So when you write all the income, revenue minus expenses, you'll get the either gross profit or gross loss. Is it clear? That is trading account. For trading account, you will come to know the gross profit and gross loss, which is prepared by using only the direct expenses and direct income. Is it clear? Any doubt regarding trading account?
No, sir.
I'll show you the format. I think format you might have seen. Are you able to see the screen, student?
Yes, sir.
Yes, sir.
The format to prepare your trading account. So what you can see there, heading you have to write trading account for the year ending on so and so date. Normally trading account is prepared for financial year end or calendar year ending. It is prepared for a period from first date to so and so date. Is it clear? It can be calendar year. If it is a calendar year, they'll write 31st December so and so year. If it is financial year ending, when is the financial year ending?
March.
31st March. 1st April of previous year to 31st March of next year. That becomes a one financial year. Is it clear? Hope all of you know that. So 31st March ending, you write the ending. Then you can see here we have a particulars. Okay. Then here we have a amount column is there. I don't know why it is not coming. Yeah. So we have particulars and amount, again particular amount. This is your left hand side is actually your debit side. This is your debit. And credit is on the right hand side. Student understood? Please respond, okay? Or else I think I will not understand. Are you getting it? Is it confusing?
Yes, sir. No,
Yes,
sir.
sir.
Debit is on the left hand side, credit is on the right hand side. Clear? On debit side, what you write? We start with opening stock. What stock is this? Opening stock of inventory. Are you getting it? Opening stock of inventory we start. Then we will write purchases, and any purchase returns are there, we have to deduct. Got it? Yes or no?
Yes, sir.
Yes,
Then
sir.
we have to write all the direct expenses. What is direct expenses? Just now I explained to you. Direct expenses is the expense which is incurred to manufacture a product. Okay, it can be the raw material what you purchase, or the engineer who's working in the factory who is involved in producing this particular product. Okay, the wages which is paid for the laborers who are working in the factory, who are very much important to produce this product. Okay, or the engineer who is designing the product design, all those expenses. Okay, and even the carriage. When I buy a plastic, the plastic has to be carried to your factory, from the supplier to the factory. So even the carriage, freight, okay, custom duty, insurance, you are going to buy insurance for the inventory. You can see there, no, freight, carriage, okay, and custom and insurance, wages, and the gas, water, fuel which is used for manufacturing your product, and factory expenses which are direct expenses. Okay, like your electricity which is used only for factory. If your electricity bill is there only for your factory, it will become direct expenses. And royalty on production. If you are buying your know-how, okay, of the production process, then you have to pay the royalty for that. That also becomes direct expenses. Okay, so we will debit all the direct expenses. Is it clear? I just give you
Yes,
some
sir.
examples only. There are many other direct expenses you will come across. Okay, so these are the some of the sample examples are given. Anyways, when we go to the numericals, I'll teach you. We will go through different examples. But these are the major things what normally you come across. So these you have to debit. And on the credit side, what we have to write? We have to write sales. Okay, and then we have to deduct any sales returns are there which are being returned by the customer. As I said, it's a loss, so those you have to deduct. So your credit side shows what? Your income. So deduct that, and then you have to write the closing stock of your raw material what you have purchased and used. Okay, that becomes your closing stock. And then we have to balance their account. If your income is more than your expense, you'll get the gross profit. And if your income expense is more than your income, you'll get what? You'll get what you'll get?
Gross
Loss.
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 There are two chances are there. You may get loss or profit. It can be gross or loss or profit, which will be transferred to P&L account. Clear? And then here we'll write the total. Understood the format, student? Because we'll be using this format. See, final account is very easy if you understand the format. Then you write the total. Clear? Anybody has any doubt, please let me know before we go to P&L account. All of you written the format, no, in your class notes?
Yes, sir.
Yes, sir.
Yeah. If you're not written, I know many of you not written, please write down today. Okay. Please leave some space. If you're not written, write down the format. Okay. See, if you know the format, I'll tell you 80% of your problems is solved. That means your problem will be 100% correct if you know the format properly. Okay. So in final accounts, the key is in the format. It's very, very easy. Final accounts is very easy. Many people get afraid, but I'll tell you it's very easy if you know the format. Like in the mathematics, no, if you know the formula, you can solve any problem if I give you. Yes or no? Science students can agree with that. Yes or no, students? Please talk. It is not monologue. Yeah, please talk. Why there is no response? All are busy doing something?
No, sir.
No,
Yeah,
sir.
why no response?
Sir, I have a doubt.
Yeah.
So trading account is usually done for 1 year, sir, or
Normally
every
done for
month?
a period. Yeah, normally done for a period. 1 year or 1 financial year.
Okay, sir.
Yeah. Yeah, can you lower the hands? Christy, Akila, Akil, Pooja, Nikita, please lower your hands. Yeah. Clear? And it is an account. It's a see here, it is called as account. It is not a statement, it is a account. Clear? That's why we have debit side and credit side. Okay. If no doubt, we'll go to the next one. That is what? Profit and loss account. What is profit and loss account? It shows you the net profit and net loss. And how it is prepared? It is prepared using all the indirect expenses and indirect income. What is indirect expenses or indirect income? Say, for example, if I manufacture the product, that is not enough, right? What I have to do now? Next, I have to market it. Then I have to spend some money on marketing. Yes or no? I have to launch advertisement. I have to do some expenses for marketing. I have to pay to the salesman. Yes or no? So I have to incur. These are called as indirect expenses, marketing expenses. And then we have to have administration also, right? We need administration. We need to have employees. The employees need to be paid salary. Somebody has to take care of that salary part. Somebody has to take care of the administration part. Okay. So we have administration expenses. And sometimes we will borrow money from outside lender, or banks, they'll borrow the money from bank. They have to pay interest. Those are called financial expenses. Okay. All these expenses are called as indirect expenses. So using those indirect expenses, we will prepare what? The profit and loss account. Okay. I'll show the format. Are you able to see the format, students? Is it clear?
Yes, sir.
Yeah, the same format is there in the LMS. You can download it and you can read again. So here what you can see in the beginning, we will bring down any gross loss is there in the trading account. It will be transferred to the P&L account. You can see there profit and loss account for the year ending 31st December or 31st March. Get it? This is the heading you have to write. Again, debit side, the left hand side shows your debit column. right hand side is your credit column. Okay. So if it is a loss in the trading account comes on credit side. When you transfer to the P&L account, it will come on the debit side. That's why you can see gross loss brought down. And if it is a gross profit will be on which side in the trading account?
Debit.
Debit side.
Debit side.
So when you bring it down, it will be on the credit side of your P&L account. Is it clear? That's the first thing you have to do. Bring down the gross profit or gross loss from trading account to P&L account. Is it clear?
Yes, sir.
Yeah. Okay. Then what you have to do? You have to debit all the indirect expenses. As I said earlier, office and administration expenses you have to debit like salary, rent, postage, telephone, okay, print, office expense, all that. Then marketing and selling expense, as I said, carriage outward. That means when a customer is buying the product, he will say, you do me door delivery. So who has to bear the expense? Company only. That's called carriage outward. Okay, freight outward, and then sales, salesman salaries, advertisement. Okay, sometimes you have to keep the things in the godown. Okay, or in the warehouse once the finished goods are over. Okay, or in the distributor place. For that you have to pay rent, commission you have to pay for the salesman, discount allowed to the customer, and bad debts. Okay, and then financial expenses like bank charges. If you have borrowed the loan, you have to pay interest. Okay, depreciation of your fixed assets, repairs and maintenance of your machineries and equipments, audit fees. Okay, as I said, right, your financial statements has to be audited. And then any loss by theft or accident or fire and miscellaneous and sundry expenses. All these you have to debit. Is it clear? Debit side, is it clear? Any doubt? Students, can you? Yeah. How to understand? Debit side, you write what? All the indirect expenses, office expenses, marketing, and financial expenses. Is it clear?
Yes, sir.
Yes, sir.
Yeah. Please respond, or else I feel I'm talking to a empty classroom. Prithvij, understood?
Yes, sir.
Then why are you not responding?
Sir, responding, sir, but there is class going on, so that's why I'm not speaking.
Hariharan? Hariharan,
Yes, sir.
are you there?
Yes, I'm here, sir. It's clear, sir.
Yeah. Brother is there, or brother Dominic?
Yes, sir. I'm here. I understood, sir.
Yeah. Then why are you not responding? Yeah, please respond. Anything you're not clear, please interrupt. Sanoj?
Yes, sir, I'm here, sir.
Yeah. Please respond, or else I feel you are not in the class. Okay, understanding formats is very important, as I said in the earlier. Okay, so on the credit side, what write on the credit side? We will write all the indirect income. What is by indirect income? These are the incomes what the company has earned or the firm has earned. Okay, not because of their main business, not because of their main business. For example, manufacturing a water bottle is my main business. Whatever income I'm going to earn by selling this, that comes in trading account. For example, if I'm having more space in my factory, I'll give that for a rent. Some other person can use that, or some other company can use that for their business purposes. And end of the month, I'll receive rent. That becomes indirect income, because I'm getting that rent because I have a more space. I let it out and they are giving me rent. That is not because of my business, what I'm doing by manufacturing the bottles and selling in the market. Is it clear? To understand the meaning of indirect income? Yes or no?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Okay, the income what I get or the revenue what I receive, not because of my main business. Okay, I have done some investment. For example, I have more money. I don't keep it in my SB account. If I keep in my account, bank account, they'll give me only 3% return. Yes or no? 3 or 4% only they give me interest. But if I invest in bonds and debentures of other company, I'll get 8 or 10% interest. It's a beneficial or not? So what I do, I invest in some other company's debentures. I'll purchase your other company bonds or debentures or government bonds, or I'll invest in some other company equities. So they will pay me dividends. So all these are called as what? Indirect incomes. Because of my giving my premises for rent, or the excess money what I have, I'm investing in some financial securities like debentures, bonds, okay, equity shares. Is it clear? So those are called as indirect incomes. Given the example, you can see commission received. Maybe you have done some consultancy and you earned the commission. Okay, then rent received, interest received, discount received by the suppliers, discount from creditors, discount on purchase. Okay, dividend received, interest on drawings. This interest on drawings, if the company is paying, the company is putting on the proprietor, it is an income for the company. Yes or no? See, sometimes what happens is the owner is drawing the cash, and in the beginning of the company itself, you have told them if you are withdrawing, you have to pay some interest. Okay, that interest is an income for the company, and it's an expenditure for the owner. That's why the interest is an income for the company. Understood? Interest on drawings. Any doubt? Students, are you getting it?
So,
Yes, sir.
No, your interest level has gone down. When I was teaching trial balance, journal entry, you were more excited, more interacting. Now what happened? Any doubt, any problem you are having? Or am I going very fast?
no, sir.
No, sir.
What
No, sir.
you're feeling that you are not interested? Yes or no? Yeah, class years, can you please respond? Section A, B, Sanoj and others.
Yes,
Minno, Minno. And the B section, class years, I forgot your names. Can you please respond?
Yes, sir.
Yeah, please tell me what happened. Why your classmates are silent?
Excuse me, sir.
Yeah.
Sir, can I log in from my phone because in my lab there is no charge and at home there is no power.
Okay. Yeah. But log in with your official ID only.
Okay, thank you, sir.
Yeah. Okay. Students, please understand, because formats, if you understand, final accounts is very easy. Just you have to know, okay, this has come, where I should put, that's all. Like now, solving a puzzle. If you know that, you can easily do it. Okay, and reserve for discount on creditors, interest on renewable bills, bad debt recovered. I said no. Sometimes if your company is very lucky enough, sometimes the bad debts will become, the person will come back to you and you will say, okay, I'll pay the money. That happens very rarely. If it happens, again it's an income, so bad debt recovered. Why it is an income? Because earlier we thought it is a loss, we have closed the accounts, but now we got it, so that it becomes a income. And then provision for bad debts is a liability. What do you mean by provision? I think last class I told. What do you mean by provision? Can someone tell me? Commerce students? Provision means it's a kind of a reserve I am keeping for my bad debts. Okay, and this provision is a liability. As you know, remember we did it in the trial balance. What did you write? We debited all the assets and expenses, and liabilities and incomes we credited. Remember? Yes or no? Trial balance.
Yes, sir.
Yeah. So we have to write on the credit side because provision is a liability. Then royalty received, apprentice premium, miscellaneous income and sundry income. So you totalate everything. If your incomes are more than your expenses, you'll get net profit. It will be transferred to capital account. And if your expense is more than your income, you'll get what?
Net
Loss. And this net loss will be transferred to capital account. It will be transferred to balance sheet. Are you getting the flow now? Trading account first, you'll get net gross profit or gross loss, and then P&L account you prepare, you get net profit or net loss, and this net profit or net loss will go to balance sheet under capital. Is it clear? Any doubts regarding the format of P&L account? Dear students, please tell me. Anybody has any problem or any doubt regarding P&L account?
No, sir.
No? Okay. Yeah.
We'll ask the doubts once we start doing the questions.
Yeah, that time I know everybody will ask. Now I'm asking. Okay, now note that you understood what the format is, especially non-commerce students, science students, or art students. Yes or no? And next one is,
now we understood.
yeah, if no doubts, yeah, thank you. If no doubts, we'll go to the last one, that is balance sheet. It's also called as statement of financial position. This will tell me what is my position of my company. They say, no, sometimes they say the company's financial health is not good. That means what? Their financial position is bad. That means what? Their assets are less than their liability. Then it becomes what? Bankrupt. It's called as bankruptcy, or we call them as insolvency. The company goes to insolvency when their liabilities are more than their assets. This is why it is called as position, financial position, or financial soundness, financial health. There are so many words which are used for balance sheet. Okay. So financial statement position is also known as balance sheet. Presents the what? The financial position of a company as on date. Okay. So as on date, balance sheet can be prepared anytime, not only in the end of the financial year. That's why it is as on date, as on today, say 25th of November 2020, what is my financial position? I can prepare balance sheet, I can come to know. Okay. No need to wait till the end of the financial year. So it can be prepared anytime. So as of particular date, this is my position. Tomorrow it may change, or today it may tomorrow it may change, but today it is the position. Okay. So it comprises of three main components. One is called assets, liabilities, and equity. This already we came across, right, in the accounting equation. Assets, liability, and equities. That's the only simple thing what we read in the balance sheet. So balance sheet is very, very easy. If you know what are the assets, what are the liability of the company, and what is their equity. Equity means what? The capital, the share capital of the company. Okay. And it tells what the users, why it is prepared, mainly to help the users to know whether this particular company is financially sound or not. Okay. Well, what is their liquidity position? Liquidity means how much they have the things in the almost equivalent to cash on cash equivalent assets. Whether they have more cash, whether they have cash equivalent assets in the company or not, or everything is in non-current or fixed assets. Okay. There should be always a balance between fixed assets and current assets. If you have only fixed asset is not enough, then your liquidity position is very bad. It is called as financial liquidity risk. It is called as liquidity risk when you have less cash. Similarly, financial risk, if they have more debt compared to equity, then credit risk, if you have more liabilities than your assets, then credit risk is very high. Then the lender, like for example, bank, you're approaching bank to get the loan, then bank will be very careful because your company is having credit risk because their liabilities are more than the assets. Then business risk, if you are suffering with the losses, day by day, every year on year, the company is earning losses, then that balance sheet will show your business risk. That is why, dear students, please understand, balance sheet is very, very important because balance sheet will show you the entire position of the company. Okay, whether they have liquidity risk or financial risk, credit risk or business risk. Is it clear? Are you getting it, students?
Yes, sir.
Yeah.
Yes, sir.
Okay. And let me go through I given separate formats. It is there in the LMS. You can download and you can write down in your class notes. Those are written very good. I really appreciate you. And those are not written, please write down. Okay. So let me see the sole proprietorship. First we will see, and the joint stock company we will see later once we finish sole trading. Is it okay?
Yes, sir.
So following is the format or pro forma of balance sheet in the order of permanence. Okay. So balance sheet as on, okay, or as a date. So always balance sheet is prepared for particular date. No need to wait till the end of the financial year. You can prepare anytime. That is why the date you have to write. As on what date? Okay. So liabilities and assets. So in India, we write the liabilities on the left side and assets on the right side. You might have seen some formats, I think, in the LMS that were taken from the international level. They write reverse. In US, they write assets on the left side, liability on the right side. So don't confuse. Everything is almost same. Only they change the places. Okay. So first we will write from where we got the money, and then we will show what we have done. They will show reverse. They will show what they have done, and then they'll show the from where they got the money. That's only the simple thing. Don't get confused. So I'm showing you the format of sole trading concern. So sole trading concern will only have capital. They will not have equity. They will not have debentures, nothing. Okay, because only one owner is there. So capital has to be adjusted with the any net profit we got. Remember, in trading account we got the profit and loss account. If we got net profit, we need to add. If we got net loss, we have to deduct. And then any drawings the owner has done, we have to deduct. And then we have to write any reserves, any transfer of profit to the reserves if you have done in the previous or in the current year, you can write that reserves. And that reserve means what? The income what you earned is not used by the company for expansion of business, or it is not withdrawn by the owner. It is still there. That is called reserve. Out of the profit what you earned in the last year, they still kept as a reserve, which will be used in the future for the company purposes, for expansion of business or launching new product, something else, whatever the company want to do in the future expenses. Is it clear? And then fixed liability, the liability whichever is having more than 1 year of term, that is called as long-term loans or long-term borrowing. If you're borrowing a business loan from bank, which is say 3 years or 4 years or more, anything which is more than 1 year, you write under fixed liability. Okay.
Sir,
Yeah.
so under reserve, so isn't it a current asset? Because we'll be using it in future, no, sir?
Future only, but it is a liability because this actually belongs to whom? It belongs to owner. We can withdraw anytime. Since he's not withdrawing, it becomes a reserve and it has to be given back to owner anytime. It doesn't belong to the company. That is why it is called, it comes under liability side. Is it clear, ma? If the owner wants, he can withdraw it. Nobody can stop him. He is not withdrawing because he want to keep it for future purpose. So reserve is kept there. It is not used for day-to-day activities. It will be kept for long-term expenses in the future.
Okay, sir.
Yeah. And short-term liability which are less than 1 year. Any payments you have to do for your creditors or any interest you have to pay, any bills payable is there which you have to pay within a few months. Whichever is less than 1 year is called current liability. Like unearned income. Okay. That means you already done the work, but income has not yet come, it becomes liability. Okay. And then outstanding expenses, which you already incurred the expense, but you're not paid. So outstanding expenses, bills payable, creditors, and bank OD. Bank overdraft, which you have borrowed the money, that means you withdraw the money by the bank, which is more than what is your bank balance. That becomes bank OD. And bank OD is a facility given by the banks only for business people, okay, in the current account. Clear? That is your liability side. Asset side, we write the fixed assets like goodwill, patents, land and building. Okay. Goodwill is what? Goodwill is your intangible asset. Then patents also intangible assets. Land and building are tangible assets. Plant and machinery, again it's a it is a tangible asset. Furniture, motor, loose tools which are used like small tools which are used, okay, for the production purposes or manufacturing purposes, and long-term investment. Okay, what are these investments? The company has excess money, I told right in the beginning. That investment they have done in other companies, they have invested in other company, debt capital like debentures, bonds they have purchased, or they have purchased equity shares of other company. Okay, these are called as long-term investments. Sometimes they may have even current short-term investment that comes under current assets. Is it clear? And why
Yes,
do we
sir.
call these are fixed assets? What are the logic behind them? Why land and building is a fixed asset? Can someone tell me?
Because we are using it more than 1 year.
We are using for more than 1 year. The longevity of these assets are very long time. You can use it for 10 years, 20 years, 30 years. Sometimes land will be used for lifetime of the company. Okay, it is not consumed within 1 year. And then we have current assets like prepaid expenses. What you have done? Remember, we have done so many examples. I think we have solved in accounting equation. Students who have joined late, please watch all the videos. You have to learn accounting equation, journal entry, ledger, trial balance, all of the things, even what baby sir has taught, because all this will come for your midterm exam. Okay, any doubts is there, you can let me know. You can message me, okay, or you can send me email. Okay, so prepaid expenses, accrued income. What do you mean by accrued income? Can someone tell me what is accrued income? Non-commerce students, commerce students.
Income received but not yet.
Yeah, advance income you received. That means you're not yet done your duty, but you already got the income. This is called accrued income. Okay, you already earned it, but cash has not come. Still, you not got the cash. It's called accrued income. Then closing stock. Okay, closing stock of your inventory. Then debtors, short-term investment. Remember, I told anything if you are investing in any financial security which is less than 1 year, that becomes short-term investments. Then bills receivable, cash at bank, and cash in hand. This is very, very simple because it belongs to what? Sole trading concern. Is it clear? Any doubts in balance sheet format?
No, sir.
No? Okay. So this I'll not discuss now. We'll get confused. Okay. We'll do it that later. Okay. So any doubt, anything you want to share before we start the problems? Understood the theory now?
Yes, sir.
Yeah.
Sir.
Any doubt before we go to the problem?
Sir, a basic question I have, like, what is the difference between commodities and assets, sir?
Commodities and? Can you repeat again?
Assets.
Commodity and asset.
Sir, difference between the commodities
Yeah. Yeah.
From the following trial balance, prepare a trading account and profit and loss account.
Yeah. Yeah, go ahead.
Particular.
No, your voice is breaking. Can somebody else read who have a good network?
Is purchases 16,000, wages 6,500.
No, your voice is breaking. Sorry for that. Can somebody read? Somebody else?
From the following trial balance, prepare a trading account and profit and loss account. Trial balance as on 31st December 2019. Purchase 16,000, wages 6,500, discount paid 1,300, salary 2,000, traveling expenses 500, carriage income to 275, insurance 150, commission paid 325, rent and rates 500, cash in hand 25, cash in bank 2,725, repairs 300, sundry expenses 55, mortgage in interest 150, building 4,000, machinery 1,500, horses and carts 500, opening stocks 5,750, sundry debtors 3,250. Total 45,805. Sales 30,000, capital 10,655, mortgage and interest up to date 3,050, sundry creditors 2,100. Total 45,805.
Yeah, closing stock. It's a part of the
Closing stock on 31st December 2009 was rupees 6,775.
Okay, students. So here, one more thing they forgot. You have to prepare balance sheet also. Okay, please add and balance sheet. The balance sheet items are given. We can prepare balance sheet also. Please add balance sheet. Okay, so what you can see here, what is this, what they given now? They are given us what? Trial balance. Remember, we prepared trial balance. Same trial balance is prepared from all the, they have done the journal, then they have done the ledger, and ledger balances they are given in trial balance for us. Next step is you have to prepare the final accounts. Okay, so trading account, P&L account, and balance sheet, they are also called as final accounts. So they are given purchases, wages, discount paid. Okay, in this what you have to do is you have to identify which are direct expenses, which are indirect expenses. If you identify that, so all direct expenses will go where? In trading account. All indirect expenses will write where? In the
Profit and loss account.
Okay, so you have to distinguish between now direct expense and indirect expense. If you know that, then you can easily prepare trading and P&L account. Okay, so now to be purchase is what? Direct and indirect expense?
Direct.
Direct expense.
Purchase of raw material become part of the product. Wages?
Direct expense.
Direct expenses.
Refer the format. Please refer the format. Okay, the discount paid?
Indirect.
Indirect. Salary?
Indirect.
Indirect.
Traveling expense?
Indirect.
Salesman. Paid for salesman, indirect. Carriage inward?
Direct.
Yeah. Remember here, carriage inward is direct, carriage outward is indirect. Okay. And insurance?
Indirect.
Indirect. Commission paid?
Indirect.
Indirect. Rent and rates?
Indirect.
Cash in hand?
Asset.
Balance sheet.
Write this one
And asset.
in balance sheet. Cash at bank?
Balance sheet. Balance sheet.
Balance sheet. Repairs?
Indirect.
Indirect.
Country expenses?
Indirect.
Mortgage interest?
Indirect.
Indirect. Building?
Balance sheet. Balance sheet.
Machinery?
Balance sheet.
Horses and carts?
Direct.
Horses and cart is what?
Balance.
Is it asset or expense?
Asset.
Asset. Asset will come in balance sheet. Opening stock. Where will you write opening stock?
Trading account.
Trading account, sir.
Trading account.
Trading account.
Country debtors.
Asset.
Asset. And clothing stock. Where will
Balance sheet.
Trading account.
Trading account and balance sheet. Balance sheet.
it comes two times. It comes in trading account and balance sheet. Clear? Trading account and balance sheet will write. Next, sales. Is it direct income or indirect income?
Direct.
Direct.
Direct income. Where will you write?
Trading.
Trading account.
Trading account. Capital.
Balance sheet.
Balance sheet. Mortgage and interest up to date. A direct expense or is it a liability?
Liability.
Yeah. How do you know it is liability?
That is.
Yeah. Because it is on the credit side. What comes on the credit side of trial balance? Either it should be income or it should be liability. Yes or no?
Yes.
Remember, now you already know now how to prepare trial balance. You already prepared so many trial balances. You are expert in trial balance, I know. So what you write on the credit side? Either income or liability. Debit side, what you write? Expense or assets. That's what you can see there, right? So if it is coming on the credit side, that means it's a current liability. It's a liability, which is outstanding liability, which they need to pay. So where you write this one? Where?
Balance sheet.
Account or balance sheet?
Balance sheet.
Balance sheet, because P&L account will not have any liabilities, it will have only expenses. So liability will go to balance sheet. Sundry creditors,
Liability.
Balance sheet.
it will go to balance sheet. Clear now? So this is what you have to do when the moment you get the question, you have to segregate direct indirect in your mind only. Okay, direct expense, direct income, direct expenses will go to P&L account, indirect expenses go to profit and loss account. Okay, and whichever is asset and liability will go to balance sheet. Is it clear? And only the adjustment, what you see below the trial balance, these adjustments will come 2 times. Any adjustment comes below the trial balance, okay, that comes 2 times, either in trading account and balance sheet or P&L account and balance sheet. Is it clear? Anyway, sir, adjustment problems we'll do tomorrow. Not today, tomorrow, next week we'll do. Today we'll do without adjustment. Only one adjustment is given. So shall we start now?
Yes, sir.
Draw the format now of trading account.
Sir, it's already 11:50, sir. It's
Yeah.
It's already 11:50.
Time's
Time.
up, sir.
It's almost.
No. What time we have to stop?
11:45, sir.
11:45.
Oh, okay, okay. Sorry, I didn't see the time.